So Coral's major asset is our sliding scale royalty. We recently acquired, we sold our project to Barrick last year. We have 3 other projects in the same area of north central Nevada. We have 50 million shares out and shrinking, so that sets us apart from everyone else. I'll explain what that means in a moment. So we have a strong balance sheet, 18 million. Actually, our financial statements went out yesterday and we have 19 million in cash. That's because the insiders exercise their options and warrants. And so we're trading below cash, so you don't see any value for our royalty in there, and it's a world-class royalty. And it's uncapped, it's a sliding scale royalty. And so it's, you'll see in a picture coming up where it's located. It's directly adjoining Barrick's massive pipeline and Cortez Hills deposits. So it's a prime location, proven management, 150 years of combined experience. We've had a long-term relationship with Barrick, going back, well, prior to Barrick was Placer Dome. Barrick bought out Placer Dome for over $6 billion. We believe it's for the asset right beside us. It's close to 50 million ounces of gold, including past production. They also paid $1.6 billion to pay out Kennecott, which was owned by Rio Tinto, for 40% of the pipeline gold mine. So it shows you we're an elephant country. And when I said we're shrinking our share issued, it's because we know we're undervalued. It's not we think we are undervalued because we're trading below cash. So we're using some of our cash to buy back shares. We've got a normal course issuer bid happening right now. So we feel that it's very undervalued right now. Nevada is a world-class area. 5% of the world's gold, 80% of United States gold comes out of there. 6.8 billion worth of gold was produced in 2016. 2017, they didn't put on here yet. But it's a world-class area, pro-mining, skilled labor. All the talent pool is right beside our project. And we're on the left-hand side. There's the Carlin Gold Belt on the top right, and then to the left is the Cortez Battle Mountain Trend. And we have 3 projects that we own 100% of, the JDN, Eagle, and Norma Sass, and then the flagship asset is the Robertson royalty. Cortez trend has produced over 40 million ounces historically up to 2017. So here's the picture. So the yellow line shows you the outline of Barrick's ground. The blue area is the Robertson property. So we have the sliding scale royalty on the entire package. We had a PEA that gave us 2.7 million ounces, and that's on a standalone basis. Obviously, in the hands of Barrick, it's not a standalone operation. This is a brownfields project. So prior to our PEA, we had a resource estimate of 3.2 million ounces. So we feel that they're going to mine more than 2.7. And as Jay said, that's just the low-hanging fruit. They're after the deeper stuff, the deeper feeder zone. They had told me in the past that they think there's potential for a Meikle-style mine. Meikle is the feeder zone to Goldstrike, one of the world's largest gold mines on the planet, which is 30 miles away. And that's the mine that started Barrick in the mid-'80s when they were a penny stock, was the Goldstrike mine. So you're in a very, very big producing region. So the pipeline, Cortez Hills, and Barrick Gold Rush deposits make up 50 million ounces, all surrounding us. They produce 1 million ounces of gold annually. It's their lowest cost operation in the world, between $600 and $660 per ounce, all in sustaining. So the major turning point was last year. We sold the project to Barrick, and part of the deal was they gave us back 4.1 million shares, which represented 8.7 million percent of the issued sliding scale royalty, Plus, we also negotiate a prepayment. So in 2025, if they don't have the mine up and running, they have to pay $500,000 to Coral for every year for 10 years. That value is not factored in our stock today at a bare minimum. So that's another $5 million. And Barrick has retained a ROFR, a right of first refusal. So if any larger companies would like to acquire this royalty, they have to buy the company. So it's an interesting setup. Here's the sliding scale. You can see it starts at 1% at $1,200 and scales up every $200, a quarter point. And Barrick is, well, we're advancing it right now. We've spent over $25 million on the property, 1,500 drill holes, half a million meters of drilling that made up our resource estimate. Development that's happening right now, well, they're working on feasibility. I keep moving because I'm running out of time here. So they're doing a PFS engineering right now, assay work. They're planning 44 PQ drill holes. These are large diameter holes. This is for when you're verifying a deposit and moving it up into the reserve category. They're doing a pre-feas, a plan of operation, an EIS all simultaneously. Normally you do that back to back. So they're such a huge company, they can do that all at the same time. And again, as talking about them having a ROFR, the only way another company can get their hands on this royalty is by taking over the company, which is unlikely because we own 30%. Myself, I own 12%. The first call that I got when I closed the deal last year was from Tony Jensen, the CEO of Royal Gold. He got his start 20 years ago on the royalty on the joining property. It was the South Pipeline. Now they're one of the largest royalty companies on the planet. So they have their eyes on us. So what they're looking for in the long term is the feeder zone. You'll see on this picture here. So our ore is up near the surface in the top 400 feet. Down below is what the pipeline is from below 1,000 feet. So that potential, the lower plate, Carlin type potential exists on our property at depth. So the best company to look for that would be Barrick, who's mining the property next door. And here's what they told me. The Meikle-style deposit, 540 feet of 0.4 of an ounce, from 1,300 to 1,800 feet. That's what they found on the Carlin Belt. That's the potential of the Robertson. Currently up near the surface, we have 2.7 million. So this was from the PEA. Generating shareholder value, so the sale of the royalty, waiting for the feasibility study to come out, then the world will know what our royalty is worth. That's going to be coming out next year, so it's probably less than 12 months away. Everyone will know what the royalty is worth. Then we can plan when we'll be getting revenue from that royalty. We will then decide if we want to continue being a royalty company or sell the company. Depends on if we get a re-rating, and I'm quite confident we will. And just to get in under the wire here, Jay, to sum things up, we just have 50 million shares out. We're debt-free, 19 million cash in the bank, and a very, very low operating expense. That 19 million cash could last us 40 years the way we're spending money, because I learned from my father to be frugal. So thank you very much. Are we having questions or no?
After.
Oh, okay. All right. Thank you, everybody.